Okay, Jason, you're on.
Okay. Hey, welcome to What's All the Hype. I did get some inbox emails from people that want to attend this, and I will make sure that we have a topic in the advertisement. Normally, I leave the topics to be very centric about what's happening in that week or that 2 weeks. So I don't like to pick them too far out in front, but my support staff is after me about a month out. So I will make sure that I have something for them to write into What's All the Hype so people know maybe what the subject matter is in the advertisement for the weekly trainings coming up. And that way they know whether to listen or not, right? My voice is kind of coming back from being sick. So bear with me in my voice. If you can't hear me, just pretend like you can. Today, we're going to talk about inflation and how it affects our business in relationship to why I feel that there's a tremendous amount of opportunity with the way the inflation is right now to hitting some high net worth individuals in that marketplace for investment real estate, whether it's second homes, VRBOs, Airbnbs, apartment buildings, etc., and why. I think I'm going to talk a little bit about what inflation is. I'm going to talk a little bit about what, it's economics 101. I think a lot of people are getting in our industry, have a lot of people to listen to. But I think if you kind of narrow it down and how I see it, I think you can see it as an opportunity to go after new business that you haven't gone after before, where a lot of people have been saving cash. And it's time to take that cash and spend it on something that you can hedge off inflationary costs and accountability. So kind of get into it. And if anyone has some questions, just unmute yourself and, just raise your hand or do something. Jump up and down. So let's talk about inflation. Everyone's heard about inflation. Everyone's experiencing inflation. I was looking at some stats lately, and I've got some notes here about how expensive things have gotten. And, everything from rental cars to gasoline to even rents have gone up quite a bit in the last year, from 2021 to 2022. The last time I looked at those stats, gasoline's up 42%. Rental cars are up 43%. And then, real estate's up valuations about 18%. And then the one that really gets me is is like meat, poultry, and things that we eat on a daily basis. Those are up like 10 to 15%. So we're really feeling the effects of what inflation is. And if you look at the Webster's dictionary, I got this from a podcast that I listened to just recently, so I'm kind of repeating a lot of what he said, but it really rang true, and I thought I could share it with all of you. Basically, inflation is increase in prices and the fall of the purchase value of your dollar, right? Things are going up, and you can't buy as much as you used to be able to purchase. And that's what we're all experiencing, right? I mean, my example for me, I like to go out a lot. And, for me to go to dinner just by myself for, I think it was like a spaghetti bolognese dinner with one martini, a glass of wine, and an espresso for dessert was like $110 with tip, and that used to be a $50 deal for one person. Lunches are now $50. It's $20 for a salad. It's, drinks are up. Minimum you're paying for a mixed drink is $10, if not 12 to 15 for some of the real expensive stuff. So, things go up in your world, and eggs are up. I know eggs are really expensive. So we're all experiencing inflation. And one of the things that I got caught up in conversations with was about people talking about, saving money and what to do with their money, and, where the inflation came from. And if you go back to, if you had an economic class in your life, you went to college, or you went to wherever and you had one, there's only really two causes for inflation. There are a lot of consequences of inflation, but there's only two causes. And that's governmental spending and monetary policy. That's it. Always has been, always will be. So people can say, well, corporations are charging more. That's a consequence of inflation. People can complain about gas prices that they just pump more, like OPEC and whoever. That's a consequence of inflation. It's not the cause of inflation. So when our government spends a lot of money, when we shut everything down, they spent more money. They printed more money. And the monetary policy was pretty easy. They printed more money because money was cheap and they were afraid that everyone's going to be unemployed. And after all that, money's in the system and we have too much money following and chasing too few goods. And that's inflation. And I think a lot of people get caught up in a lot of angry conversations about it in our industry. And what we have to pay attention to is not what's happening and have some opinion about how terrible things are, but where do we find the business in inflationary times? Where is our business going to come from? How does that change where you're going to find your business in real estate? Because that's different than it was 2 years ago, right? So it really changes the focus of your business so that you know where to go with the business. So when things happen and we look at trends and say, when this has happened in the past, where do people go in our business to find new investors? Where do they go to find things like this to be successful? And I thought this would be a really good time to bring it up. A little Econ 101 blended in with a lot of, hey, what are we going to do about it as real estate people in commercial and residential? What are we going to do to find the business? Where is it going to lead us to? So does that make sense to everybody right now? Just kind of as a general rule, where the inflation comes from, and that there's really only two causes in history. That's it. That's all. That it'll never change. And a lot of people get confused. There's a lot of conversation about supply chain, right? Well, we shut down stuff for a long time because of the pandemic, and we printed a lot of money, and then everyone had all this extra money, and they were buying stuff off the shelves, and there wasn't enough stuff coming from all over the world to purchase. That's a consequence of the monetary policy. It didn't cause the inflation. It's just a consequence of that process. And I went to Vegas during right when COVID hit the airport in between a flight out of Boise, Idaho. And there were so many people in Vegas at the airport. I was just blown away. There were all sorts of people, and the hotels were booked, and the streets were filled, and everyone had all this extra money, and with the PPP loans and blah 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 blah. So this is kind of a consequence of what happened, and I think we're into a couple different stages now, where the money's kind of dwindling out for people that had extra cash. But right now, the problem is the cash isn't worth as much as it was a year ago, right? So if you had a bucket of, this is the example I was given this morning, which I really like. If you had a 5-gallon bucket of water and there was a 3% hole in it, over time, you'd have no more water left, right? You'd have 3% less at the end of the year or the end of the month, or whatever that would be, which is the same as saying if you had $10 in 2022, 2021, December, by the end of this last year, right? We had a 7% inflationary period of time, right? So you don't have as much as you used to have. It's worth less. So where do you put your money? Where do investors put money? Where are the high net worth individuals putting money? Where do we go find those people? And that's what we need to learn to do, because the high net worth individuals are making those changes right now. They're making changes to taking their cash and saying, where do I put the money? And real estate has always been the best hedge against inflationary times. Now, you can put it into commodities, you can put it into gold. Gold's never really been a great investment over time, right? Things that keep their value. But real estate is where the high net worth individuals are really throwing their money into, especially into tax deferred exchanges, into places where they can really make some money on the cash flow. I think a lot of people forget about real estate and its depreciation as it relates to tax liability. A lot of people forget that, the costs are depreciated off your assets and affects your cash flow tax liability in real estate. So if you bring in a gross of 40, you're only paying taxes on a small portion of that gross income in your real estate income because of depreciation and other factors. And I think a lot of people forget about that. So if you had, let's say you had $10 million right now, you lost 7% on the $10 million in the last year, right? And you'll continue to lose. If we were to lose another 7% this year, you lose 14% of your purchase power in your $10 million. And that would be a lot of cash. And why are these people doing this? Because that very same reason that they're losing money in their bank accounts. I mean, if they got their money in the stock market, it's been very blessed over the last decade, making money in the stock market. But there has also been a tremendous amount of cash on the sidelines, huge amounts of cash, and people have yet to figure out where they wanted to put it. So where are we going to go find these high net worth individuals? And this is really important because these people got to put their money to work, and they're not going to all put it in the stock market. Very few people are 100% invested in the stock market at all times with all their money. Most people have cash reserves, real estate holdings, maybe some treasuries, some commodities, some stocks, some mutual funds, but majority of people don't have all their money in the stock market looking for, let's say, dividends from stocks that they get from companies that they own, like the Warren Buffetts of the world. So most people can have enough money, than the high net worth individuals, to invest in real estate. So if you put $10 million into your real estate investment in the last year, you wouldn't have lost any money, and you would have had cash flow off that product. And let's say you gained 5%. Well, if you gain 5%, or in some of these numbers, 18% value in the real estate you purchased, and you got cash flow, they gave you a return of 2 or 3%, maybe even more. You didn't get a devaluation of 7% on the cash you had in the bank. And this is what people want to do. So where do you go find these people? What you do is you go to your title rep, you go to your lenders, and you ask about certain asset classes and who's purchased what where. Hey, I got a block of investment real estate that I want to take a look at. You don't have access to the software applications that like we do in commercial. Ask them who's purchased stuff in this area in the last 6 months. Who owns these places? Who's looking to reinvest? Those people that have closed transactions, people that owned for a while, and you need to get on the phone with those people, because those are the ones that are going to be looking to reinvest their money. Because it's really, really important that they don't lose value on the $10 million that they already have. People get caught up in this industry. We talk about inflation, and we talk about, oh, this is a really hard time. What do I do as a real estate agent? This is even better for us. It's a great time to reinvest into your business. So what does that mean for you? That means if you take dollars that you make out of your commission and you reinvest into your business for potential growth, you could take some, commission, take a $10,000 commission, upgrade your technology, get yourself a coach, and maybe you can increase your business by 20%. Because if you do the same business that you did last year, and say you're just putting the money in the bank, you're losing money because the value of that dollar is less than it used to be. Now, we're not going to be at 7% or 10% for 10 years, but this is a great time to take that capital and reinvest and grow your business. Hire an assistant. Wherever you're at in your business, growth is really important for you now, because you're going to need, let's just say, an extra 7% in growth this year to make the same money to purchase the same stuff that you need for life as you did last year or the year before. So this is a great time to double down on yourself. And people are like, oh my God, how can you, things are more expensive. I don't have as much money because my eggs cost me more. That's what people do in business. That's what high net worth people do, is they go, I can't keep losing business and I can't keep losing dollars. So I'm going to increase my business. I'm going to look for growth. So where do you find growth? You find growth in investment real estate. You find growth in people who are looking to purchase things, right? Like VRBOs, another home. A lot of people have been coming to me for homes out in the desert because they want to rent them out. The VRBOs, this last weekend was a golf tournament down in PGA West in La Quinta, and they were asking about those places down there. Some of them are challenged with homeowners associations that don't allow you to do short-term rentals. And some of those people are getting on the boards down there to change those rules. I mean, these are people that are going after big dollars, trying to change things so they can make their dollars work better for the future, so they can make 20% instead of just having their money somewhere else. Those are the kind of people you can talk to. Business owners, people that have extra cash. I mean, I put one of my clients in a restaurant during COVID, and since COVID till last year, he accumulated almost $500,000 in cash, and we help him open a new restaurant where he's putting capital in there to open up a kind of high-end pizza joint. That's what he's doing with his money, and that's cash. So these are the people you need to talk to. These are the kind of people you need to have conversations with. These are the people, like when you go to the dentist and you're talking to your dentist about inflation, about how much cost has really impacted him or her, you need to say, this is the kind of person that probably has a lot of cash, high net worth individuals. These are the people you need to think about talking to. If you don't do it already, you need to add them into your scope of business, because inflation is just eating up money left and right. And I know as we look at interest rates, I mean, I don't know how everyone feels about this. And most of the lenders I talk to are kind of the opinion that the Fed and monetary policy was late to the game. So the interest rates went up pretty quickly. And we'll probably see some leveling off at some point. When that'll be, I'm not quite sure. No one really knows. But you can guarantee that that policy of hedging off inflationary increases will probably decrease over time, and those interest rates will come down. But we don't know when that's going to be. But most importantly, got to get out there to talk to these people in this business. And this is January. This is the beginning of the year. We're all looking to crush it in 23. And I really think it's important that you focus on these types of individuals, corporations. If you're calling on individuals for homes, see if they're interested in do they own a second home? Are they interested in investment real estate? Because you're not losing money with the overall investment dollars that you put in. And then of course, if you're getting cash for those investments on a monthly basis, that's even better, right? I mean, if you're $10 million is making you a 5% return. It's awesome on an annualized basis. That's great. But what you're looking for is over time that the 10 million becomes $10.1 million in a short period of time. You're not losing money as you would somewhere else where the cash just kind of sits around and takes money out of that 7% or 3% hole out of the bucket. So right now, does anyone have any questions about inflation? Does anyone have any different opinion about where inflation has come from or where it's headed? Okay. So one of the things that happens with lots of money that gets injected into our system, just kind of an idea that came across in a podcast I was listening to, was kind of euphoria, right? So when they printed all this money, everyone got a bunch of money. I mean, I don't know how much money people got, but I know even the increased unemployment was something euphoric, right? People were unemployed, and I'm going to throw out a number, but I want to say they were making $4,000 to $5,000 a month in unemployment at one point. It was insane. It was like $900 a week or something like that, and it could have even been more. And what happens over time is that money disappears, right? And when we get into the next phase of, hey, what's going on with my money? All of a sudden, people are like, well, I don't have any more money. Now they're really worried about where to spend their money. And the unemployed people, that's kind of a different take, but even the people that have received PPP loans and so forth, they're worried about their money as well. Where do I make it grow? A lot of them have reinvested money in their businesses. A lot of people have reinvested money in real estate, but everyone's concerned about it because they're not printing. I mean, not so far anyway. They're not printing more money, which could be really bad. I think if they printed more money, I think they would push inflation for quite a long time, kind of kicking it down the road. And I think that it's really important that we help those people find those clients that need to reinvest their money today. And it's something you gotta get on the phone, you gotta knock on the door, you gotta talk to the people in person, because it's not an email, it's not it's something you gotta talk to them about what they're doing. Because people are losing the cash on the sides, losing money day to day. And if they don't find a place to put it with you, they're going to find a place to put it with someone else. Does anyone have any questions right now?
Hey, Jason, I got a question. Can you hear me?
Yeah.
Let's say that you find this investor. What would be the talk? I mean, how would you present this idea that they need to invest into this at this moment, because we have a big spread between the cap and the interest rates? How would you bring this up with them?
If I was talking to somebody about it?
I'm sorry?
If I was talking to like a potential investor?
Yes.
Well, normally, depending on the situation, I always approach it from a concern. So I'd say, David, I've got a giant concern because I've had a lot of cash on the side to pay for college educations in the past couple of years. But now that inflation's kind of eating up that money, I'm kind of thinking of putting together an investment fund for some real estate. Have you thought about something like that? Would that interest you in putting together something like that, investing in a duplex or an apartment building? Would that be something that you'd be wanting to do? What are you doing with your cash? Because I can't imagine just letting it sit. It's kind of concerning. What is your opinion about that? I go that route because there's always an opportunity. There's two things we can do. We can buy something that we see, right? Raise money, or we can broker the deal. So if you found an apartment building and say, look, I got a 8-unit apartment building I found, and I'm thinking about putting some money together, but I'd like to get some partners. Is that something you would like to do with your excess cash? You have, have you thought about that? I mean, I'm considering that you're talking to a high net worth individual, someone that you have vetted to a certain degree, not just a random person off the street.
Of course, you gotta be able to talk to a person who actually can make the investment. You don't want to talk to just about anybody because they don't have the
That's
means.
correct.
You can't, you're just wasting your time. You're not, you don't have the means to do anything, so.
Right.
Assuming that they have the money and that you just do the fact finding, finding out if they do have the funds or if they have the investment that they can make. But the point I'm trying to figure out is recognize that, let's say I myself, I have money in the bank right now that I want to invest, and I'm looking at all these investments that there are. They just don't pencil out, because we are looking at the cap rates right now that they're at 5.5% for the commercial, and the interest rates are about 6.5%. So there's a negative cash flow right there. How would you overcome that objection?
That's a great question. So this is my argument, and I'm passionate about this, so it's a great question for me personally. So let's say you're making this argument for yourself, and you're saying to me, cap rates at 5 and interest at 6, and so I'm negatively amortizing my own investment, right? I'm losing money just by buying it, right? So you have to ask yourself a couple questions as an investor. Which one do you want to be? And some people want to be all three, right? Some people want cash flow. They want a high return on their investment. So they're looking for, some people are looking for cash flow, 9% return on their investment, and they want an equity gain of 20% per year for 20 years, right? They want it all. I've rarely found those types of investments, David. So which one's most important to you right now? The investment return dollar that you're looking for? Because if you're looking for return on your dollar and you're looking for cash on cash return, 5%, let's say, maybe the real estate is not for you at this time. But over time, you're going to get equity gain. And if you put enough money down, you can get cash flow. David, I'll tell you, as an investor that I'm a cash flow guy. So I've usually overpaid a little bit for the real estate that I own. And I put heavy amounts of cash down on my investment so that I have money coming in every month. The return on my money will take care of itself over time. And the equity growth will happen over time because my exit strategy and investments is about hold and keep forever. That's my exit strategy. At least 10 years, if not 20. So as long as I have enough cash flow to pay for the property and the cash flows that I'm comfortable with, I'm not going to worry about my investment return in the immediate future.
So are you talking about leveraging less than what we need to? Is that what you're saying?
Correct.
Instead of
That's correct.
25, 30% down, put 50, 60% down, and
Correct.
get something that you can get actual positive cash flow on that, and actually get those cash flow out and reinvest those cash flow out and make that multiple reinvestment. Is that what you're saying?
Yep. Because you're going to come across deals where you're going to pay less for them and they're going to really return you a cash on cash return that would be incredible, right? But those rarely happen right now. Prices are high, financing's high. So, what's the deal? Why are people still buying? Just because they know that they can put their money in there. It's going to be safe over time, right? If you've got the time, you don't have to pull the equity out right away. Because if you're looking to flip something, like, for example, as soon as interest rates went up, the flippers were unloading their portfolios. I mean, I sold a guy $1 million home. And the day he closed it, it was like 2 days later, he sold it again because interest rates during the escrow had gone up and they couldn't afford to keep their portfolio of all the assets they had because they were flipping them. And they were doing anywhere from 10 to 20%, gain on every flip they had, if not more. But in an environment where cost of money went up that fast, they couldn't keep it all paid for. So they sold everything. And the assignment deals went away, the flips went away, all those people went away for a short period of time. So that happened overnight. That just ended overnight. Like, whoop, that was it. So if you're looking for the short-term need to take $5 million and make it $7 million with real estate quickly, that time has passed. It'll come back. That time has passed. But if you've got, I've always said, if you got a little bit of time, I mean, I didn't even make it up. I heard it somewhere. If you got a little bit of time, you can make a lot of money in real estate. But you got to ask yourself a question: what type of investor are you? Cash flow, ROI, or equity?
Hey, Jason, I'm just becoming a devil's advocate here, so forgive me if I have these questions.
Yeah, bring it.
Yeah, usually, real estate asset is the class that you can actually depend on the rent growth that will actually make the property to increase value over time.
Yeah.
In this environment that we're in right now, that the rent increases has been really slowed down. I mean, in most of the country, the rent increases just stopped. In some areas they're lowering the rent right now. How would you, again, address that concern? That, hey, there's no rent increase, and why should we invest in something that there's no growth into it?
Great question. So you have choices, right? So if you don't want to invest in real estate, what are your other choices? And I kind of listed them a little earlier in the presentation. You can buy gold, but that's not going to really increase in value much. Commodities, you can go with the I bonds, you can go with, got a list of shit here. You go an S&P 500 fund, right? But what do you have to do with those investments? You have to hold them for a long time, right? I mean, you're gonna lose. S&P 500 is a great, Warren Buffett's got that $5 million bet. Any fund manager that can beat the S&P 500 over 5 years, put up your own money and bet me $5 million. Well, you got to wait 5 years. You can pick. I like cash flow. I like passive income. I like money that comes through the door that has a fundamental, like, tax advantage for income right out of the gate. And so if rent won't come up, then I'm just going to finance less so that I can have a ton of cash flow. For example, duplexes in a certain area of Long Beach over off the traffic circle sell for $1 million. They get about $2,200 a month in rent for a 2-bedroom, 1-bath, 1,100 square feet, maybe smaller, right? So let's call it $4,000 a month, $4,400 a month, right? How much money would you have to spend to get that thing to cash flow at $4,400 a month?
You got to go into expenses and taxes and insurance and all that.
No, well,
So,
I mean, right. But I
Yeah.
mean, you'd have to figure out what that's going to be. Some people would say you're insane because you're going to have to put at least $500,000 down. But that's where the market is right now. Going to have to finance less, and over time, I know I'm going to make money. You have to believe in the asset product itself, because if you don't believe in it, then don't do it. But most of the guys, the mentors that I have, that are over the age of 80, I'll tell me a couple things. I overpaid for most of the stuff I own,
That is
but
true.
I don't really care because I bought it in 1978,
That's true.
right? I mean, that's the deal.
Yeah.
Right. And you can look across the board. You can look at anything for sale. You know, we've got a strip mall for sale right now. The family bought it back in 1974 in Long Beach, right? And I think they paid, I don't even remember what they paid, 100 and 200 grand for it. I mean, whatever it was. And we're at the 20 million mark to sell it at a 5 cap. What do they care what they paid for it back in 1974? Right? I'm sure they worried about it when they did it. But at this point, that's the lesson. And it's the only thing that I find that can do this type of wealth building, and a place I can put my money and not have to worry about whether I have a 3% or 10% hole in my bucket, losing money in cash. I'm not smart enough to be, into commodities and stocks and run a portfolio where I'm not paying a bunch of fees. But I'm smart enough to know that if I got cash flow and I can pay my bill on the real estate I own, then I'm going to be okay. And over time, the rents will work themselves out. We've just seen huge increases over a short period of time lately, and everything's got to kind of catch up. And over time, those rents will increase. It may not go up where you think you'd like it to have it, but they will increase. Meanwhile, you're paying down your debt. You're paying down your debt at a faster rate than the rents are increasing. You're still getting good cash flow. And quite honestly, at the end of the day, you got to pay the bank or the IRS. So, if you don't owe anything on the debt itself, on the asset itself, you owe very little. I mean, just pick who you want to pay. Right?
Right.
So it's a great vehicle for it. It's the only vehicle that has been a hedge killer from inflation for the life it's been around. That's
Like
how
they
I
say,
see it.
yeah, like they say, it's never a good time to buy a real estate.
Right.
Because
Yeah.
at any point you want to buy, it seems high, but 4 or 5,
I mean,
10 years
how
from
many
now,
how many of us have clients that tell stories about, I bought mine at 11% interest. I bought mine at 12% interest. Okay. Where are you now? Well, I'm at 2.75. So over time, things change and you adjust. But right now, because inflation is so in our face, everyone's looking for a place not to lose money. And the high net worth people, come on. They hate losing money. They hate it more than anybody. That's why they're so wealthy, because they don't do it a lot.
thank you, Jason.
Yeah. I come from a background, kind of a mixed bag of stuff, but my stepfather, he is a stock market guy. He is one of those guys that's 100% invested all the time. If he needs cash, he sells stock. I kid you not. And he's made a lot of money over time. He's a very smart individual. I don't ever pick his brain enough, but he doesn't like real estate. My mother, on the other hand, she's like a real estate whisperer. She knows deals. She sees things. She's not a broker or anything like that, but she's made money in her lifetime in real estate. Weird purchases, strange stuff. 500 acres of barley ranch in Paso Robles in 1974, right? Sold it in 1997 for like $4 million to a winemaker. Hard money loans and keeping it alive. She was a hairstylist with 40 operators, but she did it. But she had a good feeling about it. She made a ton of money. She exchanged that into a desert home years ago, right? You don't have to be really smart, but you got to trust the product. And if you trust the product and the process, and you believe what I've experienced or you've experienced in your career or with clients, you can get people to make good decisions in this business to buy stuff like that. Or buy yourself. That's where the real wealth building begins, when you start to take away the complaints and the sarcasm of inflation and this is a really shitty time to be in real estate or whatever it is. These are opportunities that are coming our way. There's 700 and where's that? Oh, I wrote it down. Hold on. $793 million worldwide in distressed commercial debt right now. And some of it's going to be reorganized, some of it's going to be repositioned. But there's opportunities coming for people who have cash, for opportunities in portfolios that are going to become available. We're doing a portfolio right now, evaluation of 27 different properties between Texas, Oregon, Washington, California. Probably $265 million in real estate assets that they own. Strip malls, rental properties, all sorts of stuff. And they have to come up with capital in order to pay for some insurance premiums on the annuitized products that they're going to purchase. These are the people you want to talk to. People are going to have to sell, and you find somebody else who wants to buy a strip mall and take their $10 million and throw it in there, or buy a home, a second home. Someone says, I got to sell this thing because I can no longer afford the mortgage payment. Here's an interesting thing in residential real estate, because I know a lot of people here do residential. Over the last 4 years, 65% of all originated loans on single family homes across the nation were done on variable rate products. Mortgage products that were fixed for 2, 5, or 7 years. So they could qualify on the lower rate to buy the house. Let that settle in for a little bit. So you qualified at the 2% rate or the 1.5% rate. And now you got a house you bought for $1.5 million with 10% down, and that rate's about to hit big in the next 3 years, next year, whatever it's going to be. And if it's going to go from 2% to maybe they have a 1% per year, some of those adjust right away to market. And all of a sudden you're at 5%. And that's 65% of all single family originated transactions in the United States. I honestly, I couldn't believe it when I heard it. And then I saw the data, and I'll tell you, it made sense to me because these people around me, I live in a small house. I got like 1,700 square feet. Right? I got 3-bedroom, 2-bath house, right? And these people are buying these homes around me for $1.5 million, $1.6 million. I go, where in the world, one, are they coming up with the money? And two, who's got an income like that? Because I know they're not all putting down 50% down. So if you had $1 million mortgage and the rate right now is probably, I don't know, $700 for every 100,000 finance PITI, that mortgage payment's $7,000 a month, if not more. You want to talk about opportunity? Keep track of what loans are coming due. Get title to find out in areas that you farm, find out what that money looks like. Because when that $7,000 payment hits from the $1,500 to $2,000 payment they've been paying, are they going to be able to make the payment? Right now they've got equity, but if we take a 15% hit on value and they put 10% down, last time I looked in that math, you're missing 5%. So that's a really good place to find business and for other people to get investment real estate too. This is opportunity time, 23. I'm telling you. You just got to keep track of it. You got to be smart. You got to find people that want to put money into this business, into the real estate, so that you can make money too in your commissions, or if you want to participate in those purchases. I mean, this is all my opinion, and you can tell you know what, this guy is just a bag of hot air. But I'm telling you, I believe in it. I've had success over my lifetime doing stuff and getting lucky and making, you know, like I said, overpaying for stuff. But you've got my philosophy. Anybody else have any questions? No? Is this helpful at all? Is this topic interesting to everybody, or?
Jason, I gotta say, this is amazing. I took lots of notes, and I think this motivates us to do really what you just guided us to do. Because we are meeting a lot of people out there with a lot of cash. So great tips. Thank you.
Yeah, the guy says, well, you got a lot of money. Well, good for you. What are you doing with it?
Yeah, I want to talk to you privately if I could right after this, because I do have a client that
Sure.
that I'd like to discuss with you.
Yeah.
Thank you.
Anyone else have any questions? No? Okay.
Thank you, Jason. Thank you
Yeah,
so much
that's all I got. That's all I got. And you know, anytime I hear some good stuff on stuff I listen to. The other thing I wanted to, this is kind of off topic, but one of the we talked about monetary policy, government policy, right? And right now, energy policy is a real huge topic, and it affects us as real estate agents because eventually they're going to require that we have, and some of our investment real estate and homes, they're going to require that you have a place to plug in your electric vehicle. I mean, somewhat there's going to be a tax incentive or something's going to happen. You can just feel it coming, right? And I'm not quite sure what it's going to look like, but someone ran this number by me, and this is something that I thought was kind of interesting. There's 270 million vehicles on the road in the United States. That's just the registered ones, right? Out of those, only 10 million of them are electric. Okay. And I'm of the opinion that I love the electric vehicles. I just don't want to get stuck like in Big Bear in the snow with no charging station. So until they rectify that, then I can't trust myself to be out in the middle of nowhere. It's going to take a lot more than just putting stuff in our houses because we can't charge the stuff we have. So when people ask you about electric vehicle stations in homes, tell them it's coming some point. But right now, throw that number out there to them. 270 vehicles in the United States, only 10 million of them are electric, and we can't really support them all now. So it's going to be a while. And I don't know if you guys know this, but there is a nuclear facility up in near San Luis Obispo and Avila Beach. And the government, the state government, the federal government, they're going to reopen that nuclear plant. They've been taking it apart for the last 10 years or whatever. And PG&E just made a loan to the facility for a lot of money. And they're going to reopen it because they have to produce electricity. And the only way they can do it is with that nuclear plant. So don't be surprised if you see a lot of that going on as well, because people do ask about it. And I don't know about down south, but it's an interesting topic because I know everyone's talking about electric vehicles, and I thought that was an interesting statistic. And I don't like sound bites, but right now I think we need to come together and figure out a way to have both. So homeowners are always worried about that. Apartment building guys and girls, I tell you, they worry about that too, because all of a sudden, if you do improvements on your apartment building, and then if the city requires you to add stations, there's a cost to that. So keep that in mind. That's it. That's all I got today.